if you've been listening to my channel for the last 6 or 8 weeks, you know that I dropped a golden nugget. I dropped the fact that I believe we have entered a buyer's market. Now, this, of course, is a national call. It's not a regional or buy box call. It's just, hey, we are heading into the seasonally slow period. We are in an environment where affordability is tough. And we have an election that is unlike any other where people are just pulling back. And thus far, I have been right. But what I want to do here is I want to go a little deeper. We talked to Lance Lambert from Resi Club. He has all the analytics. He has access to analysts. And he's going to talk about different markets that are truly buyers markets and sellers markets. The last thing I want to say about buyers markets, folks, is they don't last long. Buyers markets, in my experience, are somewhere between 6 and 12 months, where a seller's market can last years. Lance, how you doing, man?
Doing great. Housing. Always so much going on. Are you fine if I go and share my screen and walk everyone through the data?
Yeah, I believe I've given you access. Yes.
Awesome. Let's do it. So I did a story yesterday looking at Zillow's market heat index. And their market heat index, a higher score is a hotter, stronger market where sellers have more power. A lower score is a colder housing market where buyers have more power. And so a score over 70 is generally a strong seller's market. 45 to 55 is kind of in the neutral. And then for this one, I have that as purple. For the strong sellers, I have red, hot. And then under 27 is strong buyer's market. And among the 200 largest metros, the hottest markets where sellers had the most power: Rochester, Syracuse, Buffalo, Albany, all in New York; Hartford, which we talk all the time about how tight Connecticut has been; upstate New York, and then parts of New Jersey. San Jose has been a really interesting one. There's a lot of AI money, that AI
Yeah.
boom. And,
Yeah.
and this is a market that had given up and been a little weaker right when rates went up really high and tech stocks had came down and had a correction. It's since, this is kind of the echo of the NVIDIA stock boom,
Mhm.
I think.
Yeah.
Uh, and then the rest of these are all like New England area.
Yeah. The Northeast. I mean, what is going on in Rochester and Syracuse is just, you have so much data. Is this really just a story of inventory? Is that
Well,
kind of that?
so inventory, kind of that supply demand equilibrium is still to stay tighter, right? And I think that's for a few reasons. Some of these other pockets of the Sun Belt, where affordability has been strained, but they also have a lot of new construction coming on, right? And
Ah,
so if that
gotcha.
new construction comes in, because that's where home builders are at, and they do the affordability adjustments, it creates a bit of a cooling effect onto the resale market, right? And
Okay.
then another factor is a swing of migration, where
Ah,
the
yes,
pandemic
yes.
housing boom, a lot of people were going to those Sun Belt states, right? And as we've gotten more people called back into the office, that's helped some of those markets that didn't boom as much, right? And it's really created some of a donut effect in some of these bigger markets where, okay, maybe you got called back into the office or you can't go move to Boise or Austin, but you know what? You could go move into the deep exurbs where you never would have wanted to do a 5 day a week commute.
Right,
But now
right.
you're only doing 1 to 2 days into the office, maybe you swing it. And so it's created a donut effect outside of, New York City in particular, where into Connecticut and parts of New Jersey have really benefited.
Love it.
Now, where buyers had the most power, it's a lot of these Gulf states, parts of Texas, Mississippi, some areas in Georgia, Gainesville, Naples, Cape Coral, these Florida markets that we've talked about, where some of these markets really got strained from their fundamentals during the pandemic housing boom, where a huge influx of buyers came into the market, especially with deep pockets, and kind of accelerated home price growth and put it to a place where once rates went up, it was just harder for local buyers to stomach it. Once it really had to be, stood up by its own incomes locally, it was a bit of a harder sell. And then those markets also have a lot of the new construction coming online, and they did the affordability adjustments, and it just put resale at a disadvantage. And the other wild card here is those insurance hikes that we've talked about, right? And some of these states also, especially Texas, the increase in property taxes
Hmm.
following a home price jump or shock is much faster than some of these other states, right? Where it kind of
Yeah.
lags behind, and property taxes are bigger.
Yeah.
And
Just stay on that list just for a second, if you don't mind the cold list. What I would tell folks, if you're looking at this and you happen to be shopping in one of these 10 cold markets, let me just be very clear. One is I would set up my buy box. I would definitely figure out a day on market target. Maybe it's 2 weeks, maybe it's 30 days, maybe it's 45 days. And then I would start writing disrespectful offers. I mean, I would be, because in all of these markets, if they are this cold, there are some sellers that need to sell. There are a lot of sellers that want to sell, but they're not going to get the price, so that'll just be a canceled listing. Your job as a real estate investor, your job as a homeowner in one of these 10 markets is to get the best deal you can. And that means write disrespectful offers. So what does that mean? That means you might write 10, 20, 30 offers. It might mean you follow up 2, 3, 4 times. Folks, this is a process. Great deals happen, but you have to work for it. Do the work.
And one thing I will say is that some of the markets that are still technically, sellers markets based on the metrics underlying it, the active inventory, share price cuts, it doesn't mean that some of those places, this might be still the best window to kind of be out there looking and shopping and trying to write some of these disrespectful offers. That's more, your advice that you're giving people, but I would say that this is the seasonally weaker time of the year.
Correct.
And we haven't seen, a lot more tightening yet in the market, despite the drop in rates. So this is definitely that seasonal period where buyers have a bit additional power relative to the spring, really just about everywhere.
I'm really nervous, Lance, about March, April, May. Right? If we think what's coming, we'll have the election behind us, obviously. We'll have a new administration, and we may have first-time homebuyer programs. We will likely have lower rates. The Fed will be in their rate cutting cycle, no doubt, where they could be down 100, 200 basis points. And inventory is already rolling over. Inventory is starting to decline last week, according to Housing Wire, I believe, or Alto's research, excuse me.
I think with the active inventory, it's just, it fell for the 1 week.
Right,
and,
1 week.
So Mike's kind of saying maybe it's not the drop, but it's probably around the peak for the year.
Exactly. Yeah, that's the point. And then we unlock the marginal demand. I am certainly hoping we don't get rates in the low fives, but if we get rates in the fives, and I talked to a couple of lenders today, they're quoting DSCR loans at 5.5. They're quoting conventional loans, no points, sub 6.
Yeah.
We could see a big spike in February, March, April next year. So again, this buyer's market, this window, they're always short, but you do the work, folks.
And so here's the Zillow one. If you go on my site, this story actually is open to the public. Anybody can see it. It's not a paywalled story. And I do several stories a week still that aren't paywalled. And you can go into it and you can kind of click on your market.
Oh, wow.
And see
look at that.
How it's varied since, I don't know why it's not letting me scroll down, but how it's varied since 2018. For July.
Yeah, do Vegas for me, just because I think it's easy for you to find on the map. All right.
Yeah.
Okay. All right. So it's pretty consistent. Yeah.
Yeah. Yeah.
Okay.
So it's right around here, 58.
Yep.
And I do think that Zillow's methodology isn't exactly how I would do this. It's a little bit different, but I think the gist is similar. Mine, I'd probably have Austin darker blue. I'd have some of these parts of Southwest Florida darker blue. Some of these parts of Carolina, maybe it's a little more tilted to sellers. One thing that they do is they have, the number of views on their site for listings in these markets. So that might keep Austin up a little higher because it is some place that people are looking a lot. People think about moving. I think they kind of do that to add a little bit of their unique flavor to it.
Sure.
I'm not as much into that stuff. I'd rather look at the hard active listing, how they're changing, what's happening to the prices. But I think the general gist, which is
let me throw this wrinkle at you, because again, something that I have been harping on, and you've heard me harp on it, so I apologize for repeating myself, is above and below the median. I bet you this picture looks very different if you had below the median in the regions, right? Like
Yeah.
I bet you most of this is orange and red for below the median, and I bet there is a lot more blue above the median. What do you
I
think?
think you're probably right. They don't break the index down for the different price tiers. They do price tiers so we can see price changes by tiers. But I think you're probably right. And you're probably also onto another point, which is that higher tier, I think, has been where there's been more volatility, right?
Correct.
And I think some of that is because that higher tier gets a little more impacted by the stocks. And so
Yep.
some of those have had bigger swings. I think the bottom tier has probably been a little bit more consistent, and slower to change.
Yeah.
But I think your
Even
general interest is probably, yeah,
Yeah, even if we look at the inventory, I mean, one of the things I would love to see from Altos Research or Housing Wire or Resi Club is I would love to see a map like this just focused on below the area median,
yeah,
because I think we're seeing a bifurcated market, it's a distorted market. I mean, here's an example. We haven't talked in a couple of weeks. My Fresno team told me the other day. I think this data is 3 weeks old, but the story is relevant. The median home price sold in Fresno was 440.
mm,
The median active listing was five something like 537. It was almost $100,000 delta. Now, how can that be? It's because the above the median inventory is stacking and stacking and stacking.
yeah.
And the market has never been this bifurcated. And I've been doing this for 20 plus years.
I know we got to jump, but real quick, I do want to show people another chart. This is one that I did for just my premium audience, but it's to another really important point right now, which is condos. And it's been a lot weaker for condos than it has for single family. And in particular in Florida,
Oh,
where they have a
wow.
lot of those Surfside, because of the Surfside condo collapse that killed 98 people, all the
Yep.
regulation passed. So, there's the higher HOAs, but then also those special assessments, right? The big
Yeah.
ones.
Big
And in
ones.
Florida, there's only one market where year over year condo price growth is greater than single family. And that's a
Wow.
tiny market.
Hmm.
Everywhere else, condos weaker. And 18 of the 25 markets in Florida, condo prices are falling.
Hmm.
And so you'll see a lot of headlines right now about Florida, but the greatest level of weakness is condos. And it's in particular the oldest condos
Yep.
built in the 60s, 70s, 80s, 90s on the coast. That's the
Yep.
weakest part. The strongest part of Florida is single family. And then the strongest, even more, is if you get to single family construction and
Correct.
further away from the coast. Um, but it all does vary across the state. And the weakest part of the state is the pockets of Southwest Florida, Cape Coral, Punta Gorda, Northport, Sarasota, parts of Naples, little parts of Tampa that were also affected by bigger home insurance shocks, and also Hurricane Ian, which is the third costliest hurricane in U.S. history in
Oh, wow.
September 2022. And here is a map of just metro level price changes across the country.
Hmm.
No, this is condo. Sorry, condo. This is condo
Right.
across the country. Golf weakest. Now I'm going to show you single family. A lot less red.
Yep.
You down here? I'll show it again.
Vastly different story. Yeah. Look at that.
Condo, single family. Yeah. And really single family, the price. And this is a bit lagged because this is year over year, and you're going to see a little bit more weakness come into this,
Sure.
but still, condos been the weakest. And then here's another fun one. This might take a second to digest. You might have to screenshot it, but this is year over year change in condo price right here,
Mhm.
year over year change in single family. And if
Oh.
up here, it means condos up, single families down. There is not a single market in the country where single family is down and condo is up right now.
Hmm.
Condo up, single family up. So you're up for both. That's
Got it.
this.
Got it.
Condo down, single family down. Austin's in here. These are the legitimate down markets in the US. Punta Gorda, Austin, San Antonio, right?
Yep.
This box here is condo down, single family up. there's a lot of markets in that.
Yeah. Yeah.
These are the Florida, a lot of these are the Gulf, but it's kind of interesting to see this in a normal market where there was, more balance in both. This would all be pulled a little bit this direction, and we'd be like right here.
Yeah. I like it.
This would be like 2018, 2019. But that's just kind of a nice way to show, a little bit more weakness for condo.
Very cool.
And what this means on a data front is that you're going to see a little bit more, and I don't know if people care, but a little bit more weakness in the indexes that are single family and condo. So
Correct.
Zillow value index is up 2.8% year over year. Case-Shiller, which is just single family, is up plus 5.4. Zillow is condo and single family aggregated.
Good to know. I did not know that.
You can pull it apart, which is what I did for this story. But that top line that I share is condo and single family, plus townhomes, co-ops.
Lance, this is why you are housing. You got all the data. You have all the access. You give it away in Resi Club. Where can people go to learn more about Resi Club?
Yeah, if they want to sign up for the newsletter, go to resiclubanalytics.com. You can just type in your email. You can get put into the free list. I also do more data stories every week and have more offerings for my pro members, and that's called Resi Club Pro. Once you sign up for the free, you'll get some of the details if you want to see the premium product. And also people can follow me at News Lambert, always tweeting lots of stuff, daily mortgage rate stuff, lots of charts.
Yeah, daily mortgage. I can't believe it, down to 637. I think you tweeted out earlier today. Pretty crazy.
6.35. So just
3.5. My bad.
1 basis point above the 52-week low, which is actually the 16-month low of 6.34. So we'll see if we could set a new 52-week low for mortgage rates this week.
There you go. Tomorrow we get the big jobs number. It could happen. Lance, you're amazing. Take care.
Thank you.